All right, so again, a few people just now hopped on. I wanted to remind you again, my name is Daryl Martin with ApexInvesting.com, and we're going over the KISS strategy today, and doing a market review. Also, going to be giving away all the cash from the review today. So, and that's going to go to one lucky person from the live event, or that went to the, or even attended on the stream. So, all the money again, giving that away today to one lucky person. We'll do a random name draw and put your names in the list and see who gets it. Everybody says that everything is working. Looks like it is. Fantastic. One thing I want to remind everybody of is, you can get access to the KISS strategy for $97 a month. But we also have a big discount right now where you can get an annual discount. And we also have a promotion right now where you can get silver access, actually get gold access for silver pricing and save a ton on it. So usually gold is $3,600 a year. So you get it for like half off of that right now. And that doesn't happen very often. Okay? So this would be a very good time to take advantage of that. Again, that expires today. So make sure you do hop on there. Take advantage of the upgrade if you haven't already. Reminder, order prints is about to expire. You want to take advantage of that while you can get the discounted pricing. Okay? And versus just getting the silver with order prints, get everything for the same price. So I don't think anybody has any questions on that. All you got to do is click here on the button as soon as you log in, and you'll be able to access it. So with that being said, the next step is I want to go over a few things with you that I do each morning. This one a little bit different, okay? Than the last, but just some of the things that I actually put into place, like magnets and sort of where they come into place. I want to tie in order prints for you. I want to show you the larger tick bars, the wall sizes, the things that we've just started to dive into that a lot of y'all got to dive deep into at the live event on the stream. And of course, the recordings for that are going to be made available for something if you don't have access to it. If you want to, get the all-in package, then that will be made available for a separate purchase. But we're working on all that stuff right now and getting it all done. But the first thing I'm going to do to start my day off is I'm going to go to the news calendar. Okay? So yeah, even if you're gold, you may want to check with John because you can get that. There may be a better discount for you. But yeah, so I hop over to the news calendar. I'm going to see what's going to be on here. Now, of course, I talk about this stuff in the elite room, right? So y'all are in there in the mornings. A lot of y'all are in there, hopefully, and taking advantage of that report. It pops up every morning, okay? And the other thing is what is going on right now in the markets. We have this happen every quarter. We have what? Earnings, yes. And so earnings sort of wake things up, which is nice, all right? And we get some big movements. And some of those are going to happen before the market opens. Some are going to happen after. And we actually go in and we look for when they do the press release. Not when they do like their conference call, because sometimes that could be at a different time. But like when the wire goes out with the results, because that's really what will rock the market, make the market move around. And we've had some big ones this week. We have more coming, okay? We got things like Microsoft, Netflix, stuff like that. So obviously things that really move the market can make for some great after-hours trading. Good time to possibly look at straddles or touch brackets or just a lot of different ways that you can trade them. But also just straight up futures and Forex trading. And so make sure that you are checking this. We try to keep this updated every quarter for you. And so that way you're not having to search everywhere to find out what are the high weight stocks that move the market, and not so much that you're concerned about the stocks. I mean, you could watch them and all that, but the big thing is just knowing when those earnings are coming out lets you have a lot better idea. Like Netflix at 4 o'clock is going to release their earnings. Well, what do you think Netflix is going to impact? NASDAQ, things like that. So, and then of course the most important thing for John coming out this week, I guess we need to add this to the calendar. Cameron is in game because he's a Marvel freak. So. But anyway, so that news we can add on there for you. We also have, so I check out the earnings reports, okay? So if you want to have like a little list of what does Daryl do in the morning. 1, I check earnings, okay? 2, I sort of say I check this, but since I write it. But I look at all the major headlines in the news to see, what's sort of rocking the market, okay? And I'll include those down here. First thing I'll do is I'll release out the IV report. So what are we looking at? Do we have higher IV, mixed IV, low IV? And is there anything I want to avoid? Like, I love today that nothing was low IV. That was a nice heads up on the day being a nice day, right? And of course, are we shocked that it's low IV, not low IV? No, because all the U.S., all the stocks are coming out and reports are coming out, earnings are coming out. For those who don't know what IV is implied volatility, which is a really fancy word for expected movement. Okay? And it's the expected, like, how much is something going to move. It doesn't mean how smooth is it going to be. Okay? It just means how much is something expected to move around that day. I prefer things that are, usually medium or high. I'm cautious when they're lower. So I'm going to be using, more of my 70% risk reduction method that I teach you in KISS and things like that. But so we look at basically option contract pricing. We pull out the optionality of that. We compare 4 different things together. It's a fun, big process, and it results in you having an idea on what to focus on. Okay? And that's where the IV and all that fun stuff comes into place. So check that. It helps us determine bar size, sort of just with expectations. Like, hey, I may have to go up more, especially with low IV. I may have to go up higher in bar size to not be as wicky. And, vice versa. I also, again, I'm going to go down here and, I'll list, okay, we got the new home sales coming out at 10 o'clock, so there's probably going to be some impact with that. We also are going to have, the Aussies going to have their CPI tonight, so be aware of that. Again, I said, reminder, we got Bank of America, Goldman, Citigroup, United Healthcare, Johnson & Johnson, all having earnings this morning. IBM and Netflix having their earnings at the end of the day. The Disney Plus app could be, a heavy weight on Netflix because they're coming out and they're actually Disney Plus. Since Disney now owns Fox, they own Marvel. And since they own Star Wars, they're going to own all those movies. So they're going to pull the whole Marvel universe, all the Fox movies, and, obviously all the Disney stuff, and all the Star Wars stuff is all going to go under the new Disney Plus app that's coming out later this year. My kids can't wait for it to come out. And then Disney also bought back the percentage of Hulu that IBM owned. So a lot of little things like that, saying, hey, these are things that are rocking the market. News is good. The more news, the better. So, and I check out the headlines, see what's going on, and sort of keep you up to date on that. Okay? Excellent. So a bunch of y'all have already went in and got, it goes cha-ching, cha-ching, cha-ching. Awesome. So a lot of y'all went in and y'all have actually built your entire ATM calculator up. That's fantastic. Okay? So, again, makes just spend an hour or two. It's boring, but it is worth it. It makes life so much easier. This trade went so fast that I didn't even have a chance to do anything. Like, it got in, stopped, it trailed my stop, and in this case, it knocked me out. I lost 5 ticks on the trade. Okay? So, not a big deal. Went up, boom, out of the trade. But, it can happen really fast, and you can give up a lot of money you don't need to give up. Even those of you that are trading Nadex, putting this stuff in and hearing the alerts can help out tremendously in helping you keep up with when to adjust your stops. I don't worry about putting a numerical alert on VAD. I just literally mark it, and I will visually know when it's there. So, I don't need another. It's just going to be obvious when it gets up there because it shouldn't be up there that often. So I just have a big pink line, and when it hits it, then I'll do it. So the question is, again, can I have an audio alert for when VAD hits extreme levels? If you want to go in and try to set up a price alert that's tied into VAD, you can, but I don't really see a need for it. It'll be very visually obvious. All right. So far, pretty simple. We got in, started the market, in, out of the trade, 5 ticks. We kept our, risk small. And down 5 ticks so far, so let's fast forward some. And this could be painfully slow, as you're actually trading, right? All right, so now we've laid a magnet down, and then I get a long. So One of the things I want to challenge you on is, and I talked about this, we actually gave out these poker chips to say all in on them. And the question was that you should ask yourself is, how will I feel after I get in this trade? Like, well, I felt like I think it's probably going to go up. Or am I, because of the probabilities? Or do I think, well, it possibly could go up. Like, is there something on the chart telling you, in this case, the KISS entry, but also other stuff that's going to help give you more confidence. But to make sure that you don't just accidentally take trades where you shouldn't, that you're not chasing trades, that you're not just randomly doing trades for no reason whatsoever. Okay? And so, anyways, so I put the order on there. We got the KISS setup arrow. See that little cyan arrow? It'll pop up when you want an order. And we actually placed the order to buy. The 4 ticks above is actually already marked by this price level indicator, this bar range indicator. We've built in a setting on it where you can make it be whatever the rule is, in this case 4 ticks. And we get through all this in the training. But, anyways, the order's sitting there, enters. Instantly, my stop is set where? Right down here using the ATM. It did it for me to where the volatile trend line is located. Okay? And then once this bar closes up, then, which is a very high 80% plus probability rate that we've seen, then I tighten it up to 1 tick below the high of that bar. Okay? Everybody with me so far? Pretty simple. Like, cyan arrow, buy 4 ticks above, or 4 ticks below if it's, short, right? It'll turn green once if the bar does close up, then it'll turn green. If the bar does close down, then it'll turn red, like we saw there. Now, something that's happened is I just got another magnet. Remember I said I'm watching for my magnets on my 10 minutes. So I plot it, drag it back off the screen. Okay, so now I got a magnet level being weighed down. I like that. I like that there's a magnet and we're taking off, we're going above it. Okay? So, because that's a high volume price level and the market is continuing to rise off of that. Plus, it's also thrown down some institutional, blocks. It's thrown down magnets. It's thrown down mini magnets, all in the same process of this moving up. Because this is the hardest part of trading right here, I think, is when you're in a trade and you're up. And every fiber in your being says, take the profit and run. Take it, right? And so you got to ask that same question when you want to get out as when you want to get in is, how would I feel if I got out of this trade right now? Well, I feel like I had $100-something in my pocket, or $200 in my pocket. Right, but what if it ends up going up like 700, 800, 900? Okay? Well, we don't know what it's going to do. And we're never going to be happy with the outcome unless we just happen to call the tops and bottoms, which you can get better at by using some of the things, that we teach you. On this one, I'm starting to look at different things. Obviously, we're starting to get higher in VAD. I'm waiting for it to actually hit an extreme level. We also can be looking for, new magnets possibly plotting. We can look for any kind of burnout bars that may plot. Okay? And notice we had, pretty big bar over here. But, we're looking for burnout bars. And we got the stars. So let me just pause. So notice I'm getting stars, and I'm getting low volume score. 8 star, 10, 11 star, right? So see these little stars happening right here on the top of the bars? Do y'all see them? So those are starting to pop up, and low volume scores are starting to pop up. Right? Everybody on the same page. Everybody sees that. You also see all these levels popping up. Okay? And we've been trailing. When I see this start happening, I start setting my stop to a tick below the previous bar that's closed there. So 2 bars back. So like right there. And then I'll move it back again and again. Does that make sense? So not just anything, like we taught you at the live event, not just anything that we tied it up for, but when I'm seeing, what else do you see happening down here? Anybody notice a big level being crossed right here? The bottom? We're getting into what? VAD extreme levels. Exactly. Extreme VAD. So extreme VADs, we got the stars, we got low volume scores happening all at the same time. Is the probability of a reversal pretty decent? That one is coming soon. With all these things happening. So it may run 5 more bars, it may pull back right away, but the probability is high. It's not just possible. It couldn't possibly go any further. It must. It can always go further, right? But we don't have a whole bunch of walls and stuff to look at going backwards. So we're going to have to depend on live magnets. We're going to have to depend on walls as they're being created. We're going to have to look at VAD extremes. So again, all about the probability, not the possibility. Okay? So notice I start tightening tighter than the volatile trend line itself. Again, just to the low of that bar is each bar, or the high, one tick below the high of the bar is each bar closes there. Because I have a reason to move it up. And boom, okay, I'm out of the trade. So that trade right there's netted like a $300 profit. Okay? Not bad so far. So let's see here. Yeah, that one made $335. And I'll do a total review with you at the end here. But instead of us giving it all back, coming all the way back down here, we were able to basically grab another like 5 or 6 points by using order prints. So we had a very objective entry, an objective stop, an objective way to lower our risk, an objective way to trail. But we also had the ability to start to read the markets and get that edge by combining order prints in with it and pocket another $150 or whatever right there. That, because I mean, if we would have waited and it would have came all the way down 18 ticks plus another like 10 or so, I mean, you're looking at about 20, 25 ticks, and you know, $5 a tick, that's $100, $125 right there that we just pocketed just because we used order prints in combination with that. So, good question comes up here. How did I plot the magnet levels on the 18 tick chart? Yes, I got. Is it from the 10-minute chart? Yes, I go to the 10-minute chart, and we actually have a couple videos on the magnets inside on the KISS page, the KISS training. But just to help review, I'll go over. Like stop. There we go. And so I draw it whenever, like basically you have like this orange level popping up, right? So I'll go in. And I'll draw the level, and then you can double click on the level and say make sure it's showing on NASDAQ all charts. And then what that'll do for me is it'll allow it to automatically be plotted on this chart for me. Okay? So because if I put it just on the diagnostic charts, they're going to have magnets all over the place. So the 10-minute charts being institutional level sizes has helped the B. I've used it for years. For a long time. We just finally got it automated. So yeah, so one of the things you can do as you're learning to take it to another level is you can actually add VAD to your KISS template. Like your KISS OP template, you can go in and add VAD to it. And you can use that to help you look for extreme levels to know when, hey, I actually have an objective reason now, because we're sort of looking for that, aren't we? Like the bigger up, the more profit you get in a trade, you're like, give me a reason to tighten my stop. I want to be disciplined, but I want to tighten my stop. I don't want to tighten it too soon, but I really want to tighten my stop. We have that constant battle going on. So, go in there and use these two things together, like we talked about at the live event, and you can actually tighten it up. Okay. The question comes up by Keith. He says, "What indicator shows the stars with the volume, with the volume score on it?" That is the order prints indicator. Okay, so in order to get access to that, that's like the silver or gold. So this is about like helping you. KISS works, bronze works great, but if you're wanting to maximize, like keep that $125, $150 in your pocket, it sort of pays for itself, right? And we're always adding to it, updating it, everything else. So now, a question came up. So I hope that answers that. But that's order prints. Right there, and VAD and order prints come with the silver and gold as well. Yes. Question: why am I using 18 tick versus 12 tick? Well, based on the market report, this was a mixed market, and I'll start with the 12. I'll look at it, but if I see too many wicks, then I'll go in and I'll grab the bar size. So 12 plus 25 divided by 2 is 18 and a half, and I round it to the nearest even number. So in this case, I went to 18. So you could also even round up, like you go up to 20. But 18, I used it yesterday, used it today. But I found that somewhere, and a lot of other traders will attest to this as well inside the elite room, that an average in between the small and medium is often going to be your best bet. It's going to help get rid of your wicks, because wicks knock you out of the trades, right? You don't want it too smooth, because then you can't trail fast enough. You don't want it, too wicky, because then you get knocked out. So you got to find that balance in between. And so I'll start with 12, and then I'll usually go up from there. And usually I land right around the average on most days. Unless everything's just in super high IV, then I may go down. But, so the KISS setup with OP, there's no update to it. You just load it on up. It's right there. If just to add VAD, just right-click on your chart and choose Volume, Accumulation, Distribution, and click it. And it'll add it on there. So literally just add the indicator. Yeah. Alright, so I think I got everybody's questions so far. Alright, so we got the long right there. Now it's pulling back. So what do? I'm going to put my entry to go short. 4 ticks below what will be the low of this bar, which I've set the bar offset on the bar sizer to tell me what that exact price will be. So I just right click, hit sell. If it gets filled, it's automatically going to take over with my ATM. I can adjust it like you saw me adjust over here. While this is happening, I got another magnet. So put my 10-minute chart up, quick, put it in, boom, we have another magnet level. So expect possibly some resistance and chop right here. And, something to look at right now, if I go into this, what am I looking at? I mean, just to pause for a second. If I end up getting filled on this short, I'm coming into blocks, I'm coming into zones of interest, I'm coming into a magnet level, all of this right here. So if I'm coming into all these levels when I go short, am I going to look to just leave my stop way back to the volatile trend line, or do you think I would end up tightening it up? Like each close down, tighten it up to a tick above the low of the bar before that. What do you think would be wiser? Leaving it way back here when I'm coming into all these levels, or tightening it up? Yeah. So tighten it up. So there's times when you want to tighten. There's times when you want to, when there's room. You have something you're bouncing off a wall that you want to give it some room. There's other times when you want to keep it really close. And notice I still take the trade. I still have my trade ready to go. Okay. So let's see. Exiting the trade with a stop market. When I want to get out of a trade, I want to get out of a trade. So I always get out with stop markets. So I have literally had winning trades turn into massive losing trades simply because my limit got placed, but my order didn't get filled. I've had stop losses that got jumped. And so I've learned over the years that you're giving away a whole lot more by trying to demand an exit price. You don't really get to demand your exit price. It's like whitewater rafting, right? You can choose where you get in the river. You don't get to exactly choose where you get out. You can plan ahead, and you can shoot for a certain point, but you can't just go, I want to get out now. I mean, you have to literally paddle and get it, despite all the rapids and everything, work towards the land. So I'm picky about my entries, and then I choose whether I'm going to give it room or tighten it up, but I'm not going to try to demand exit now at this price with a limit on an exit. Not unless you just want to get cremated. So definitely use stops. You can use stop limit offsets for your entries if you want to. So I haven't found I've really had that much issues because of the markets that I trade, the sizes. If I go up in certain sizes, I'll start using stop limit offsets. But so the question was, what's the challenge, and how much are we giving up by exiting with the stop market? Hopefully not a lot. So, but you could be giving up a lot more by not getting a profit because you had a stop limit, or taking on a larger loss because you had a stop limit. If that makes sense. All right, so bar closed up. I cancel my order out. Okay, I had it sitting there. Bar closed up. So now I'm waiting for the next trade. Okay, pretty simple. Trying to fast forward this a little bit. Come on, there we go. So market's breaking out. We're making new what again? And we're making more new highs. Exactly. Let's see. Question comes up. Do you trade now only the NASDAQ? No, I trade multiple markets. I usually have up at least 6. So I'm just trading NASDAQ for this example because I figured it'd be a lot easier to show you all how to focus on one market, and then you can, of course, apply it to multiple markets. Try to make it just, break it down. All right, so a good question comes up. So in learning order prints, I thought the green star meant momentum. It does. Or buyers pushing the market up. Okay? But often that's that last push. You're seeing the buyers are having so much success that the sellers are often drying up in that same process. Okay? So momentum can still happen within exhaustion. You can still have a big push, but the sellers start waning out. And you will find that often the stars will precede reversals. Now, not just a star by itself. Nothing on order prints by itself means much of anything, right? You need to have the combination. But when you start putting together stars with low volume, then like on the volume score balance that we have on here, the ratio, then yeah, get ready for a reversal. Now, a lot of y'all are seeing this and it's taking off and we're not getting an entry. Right? And so you're like, man, I missed out. I wish there was another arrow. Any of y'all have that? I want another entry. Give me another entry. Right? Am I the only one that's like, give me another entry? I want another entry. Don't take off without me. Okay, because remember, we got out of the trade over here. Well, one is, remember, our goal as a trader is to get the meat. Okay, the middle third. Not the fat, not the bone and all that, but the meat. The best traders in the world get the middle third. So you get a 1 pound steak, a third of that is the actual meat that you're looking for. Okay? If you can get that, you get very wealthy. Alright, so we just want the third. We're very happy with the third. If it does give us another entry, great, we'll take it. But also, if you start looking at it, if I would have got in here and tied my stop up, that would have stopped me out. That one would have stopped me out there. So over and over, I can actually see where I would have got stopped out on that trade. It became very wicky at the end here, which is also a good sign that, there's possible reversal coming up. So, and, again, those momentum stars showing you that they were aggressive in that bar. So that's what that momentum star means. They're aggressive there, but sometimes they're more aggressive because they're buying at the top. Let's see here. Carl's getting hungry. Let's talk about stick. So let's keep moving forward. We're waiting for our next entry. We're just sitting back, being patient. Making new highs, feeling like we're being left out, right? That's okay. What would you do if you hopped in? Where are you going to put your stop? Where are you going to tighten your stop? How are you going to feel when you hop in that trade and you weren't supposed to? It's going to mess you up mentally, right? It's going to mess up your whole game. So just remember, before you hit that button, ask yourself, how would I feel if I got in this trade right now? Would I feel like I did a possibility trade? Like it possibly may go up, keep going up, or a probability trade that it's likely that it will happen based on what's on the chart? So now we got a short. So we're going to put our short trade on. We got a short arrow. Pretty simple, right? So even with the complexities of OP and all that stuff, like the system is still very, very simple. We know where our entry is, we know where our stop is, we know we're going to tighten our stop, and then we're just going to look for, reasons to tighten it even more. Now, if I did go short here, what am I looking at? I'm looking at all of these institutional blocks and a magnet level. Almost like a little block sandwich right there. What am I going to do? Am I going to tighten my stop up? Or am I going to leave it way back? Like, am I going to start trailing it down, like, with each successive bar that closes? Or am I going to tighten it up? And notice this one we didn't do that because we didn't have a bunch of stuff. Like, we didn't have, like, things stacked together really close in our way. But this one we did. So we get in here. We're waiting to get in. We also got a star popping up at the exact same time that we're getting in. And then we filled. Now, what happened was, now this turned out in my favor. Due to the fill price I got, it actually didn't even have to close, and it tightened it down my stop for me. This bar hadn't closed yet, but having the ATM set up to move my stops based on my profit, okay, it automatically tightened up my ATM for me. And instead of it, turning around, which is what happened on this trade, I would have been tightening it up as soon as this next bar closed, but I'm waiting on it to close. ATM's taking care of me. It's already got my stop tightened up. And then I'm out of the trade at a few tick loss. No big deal. Okay? Now we're going on to the next trade. So we lost 30 on the first trade. We made $335 on the second trade. Then we lost 5 ticks total on this one. Yeah, so $25 on that trade. All right, so now we just got to be patient, waiting for the next one. If I get a short again, by the way, I'll fast forwarded past that, but we got another magnet at the top there. So now we got a range where we're looking at everything. So yeah, in the shark zone, exactly. And so I want to be very aware if I get a short that I'm going to be tightening my stops up, okay? Quickly. Am I using the 70%? I'm not using the 70% because my bar size is greater than 14. So I need to be 14 or less to use the 70%. I mean, you could go higher. You're giving up your highest probability bar, the bar after the setup bar, and you're starting to get to a point where you're starting to take on a lot more risk. So we've been taking on 11 or 12 ticks of risk off the highest probability bar. So sort of up to you, but the rule we sort of stuck with so far is to, leave it at 4. I'm going greater than that. Alright, so we're just waiting. Waiting some more. Still waiting. We got a short there, didn't get filled, obviously. It's bouncing back up. Just checking my magnets, looking at everything. Starting to pull back down. Okay, now we got another setup bar. Put a short in, 4 ticks below the low, which is right at that. I mean, it's a little boring. It's so simple. So since I'm using the 4 tick, I am using the traditional ATM, not the 70% ATM. That is correct. Because 70% requires that you're actually getting in after that bar, after the setup bar is closed, right? So I have to use the traditional if I'm using the 4 tick offset. That makes sense? Jeremiah and Paul? If I'm just using the straight 4 tick offset on a bar that's larger than 14, then I'm going to be using the traditional method. Because I'd have to use a larger offset. Obviously, I'd have to use half of it plus 1, so 10, in order to be able to use the 70% method. Now, just because I use that doesn't mean I can't tighten it up sooner, right? Bar closes, I see everything happening, I can still tighten it up. Can't zoom in on this right here. Sorry. The numbers don't really matter though. Like, just all you need to pay attention to is there's a purple line and there's the green line crossing it. Don't get caught up in every little number. Like, that's real easy to do. Is you start worrying about, well, what is this level, and it's relative to what's been happening over the last week. So that's why I said I go in the morning and I set it, and I will reset it again tomorrow, and I'll reset it the day after that. So don't get caught up in the number, okay? Because it can be easy to get worried about the numbers on here and think that every number has a magical value to it. It doesn't. So it's just, I can tell that this is when we're getting into an extreme level. And you can sort of see right there, we start hitting that extreme level, and what happened? Pulled back. So now we're in a short, we're at an extreme level, okay? On the short side, right? So we got in short, we're hitting an extreme level on bad right into the thing, okay? We're coming into a magnet, then we got a couple of institutional blocks there, and we have a magnet level. So are we going to be tightening our stops up? Yeah, we're definitely going to be tightening them up. So again, now I want to emphasize this thing about the levels is don't get locked into numbers and percentages and just draw a line. Like it's not that perfect, right? So remember, it's just like in life. We talked about how in life, probabilities are just at their probabilities. And means you're trading literally with uncertainty. And so you're not going to find certainty in a certain number. Right? So you have to use good risk management and put probabilities in your favor and accept that you're trading in the midst of uncertainty. Look at it, draw the line, move forward. You notice I didn't spend a lot of time. I spent like a second drawing the line. So same thing, just click, boom, okay, it's crossing through a bunch of them, next. And that's there just to help me go, hey, you know what, I may want to be tightening my stops with each successive bar. And so I did that. I'm tightening them up. And as soon as this bar closes down, which I'm literally just like dying and waiting on it to close down, okay? As soon as this bar closes down, then I'm going to tighten this up, and I'm going to tighten it with pretty much every bar after that. Because I'm coming into all these stacked levels together. Okay? So it's oscillating around, and I have to give it room, or else it's just going to kick me out right away. That's the hardest part, is that first bar. And every once in a while, that first bar bites you. It's rare, but it does happen. But that's also why we have the offset rules and things like that to help minimize that. Whoops. So rewind or fast forward? I rewind. Try to jump ahead a little bit here for you. This bar took its time. Okay, this is something I want you to see right here. Jump past it a little bit more than I wanted to. Okay, right here. Now, who can tell me what just happened that would make me want to tighten my stop all the way down? And I didn't even get it fast enough. I should have been out like right there, literally. Like at that moment I should have got out. What happened that says get out of the trade right now? Just take your profit and run. There we go. Good. The finger bar over here, this big VAD burnout happening right here on this 30-tick chart. That's why I have it up right there. I mean, it's like negative 50,000 or whatever. I mean, that's a big bar. It didn't slowly get up there. It just was huge. Which shouldn't be a big surprise because it's a reversal bar. I got a cluster. There's a good chance that could happen, especially on a cluster reversal bar, right? So that gives me a little hint that might be happening. I should have been paying a little better attention. But, I mean, I should have been out right there. And before I know it, like, you sort of watch what's happening. I'm like, oh, I need to tighten up my stop. Okay, so I'm tightening it up, and then all of a sudden I look over, and I'm like, oh, wait a minute, there's a bad burnout bar. I need to get out. And then I'll start, I'm looking at least, where my mouth's like, I need to grab it. And so I'm grabbing it, I'm moving it over, and then I hop out of the trade, and I end up grabbing, ended up netting like $25. Should have netted like 60 or 70 if I would have hopped right out. But it was very obvious, it was there, it's just, I probably was typing in the room or something like that, or on Skype, or talking to somebody, and I looked over, and I'm like, I need to be out of this trade right now. And that happened to also line up with the eye block level. But objectively, I could see that large VAD bar, because usually they build up over time, this thing just was huge right out of the gate. Okay? So, a trade that could have easily turned into a loss ends up being a profit. So, it's not just what you make, it's also what you keep, right? Alright, so we're going down here. We're watching. Now, I got these eye blocks surrounded by magnets. Okay? I just had a bad burnout. What does a burnout bar usually mean? Like, what does that usually mean? It means reversal. It means the market's probably going to go back up, right? That's why we hopped out of this short really quick. Because we're like, there's a good chance the market's going to pull back up, and it did. Okay, that trade would have been a, small, but still a 5-tick wash trade if we wouldn't have hopped out of the trade. Okay? Or, we tightened up our stop, so we still would have made, some money on it because we were using order prints. So between order prints and the VAD on the large tick bars, we had a good heads up there. But if you look at, you got this big, burnout bar happening. And we have these levels, right? We got these magnets. We have, a magnet right there we're coming off of. We have these eye blocks. We have, we were pretty stacked. Do y'all see this as a wall? Even over here, we got 2 eye blocks and we got a magnet right there all together. So if I just got a big reversal, okay? And I combine in, low volume score happening with a star. Okay, we got 2 stars in a row. We got a low volume score. We're coming right off the institutional blocks, right off the magnets. We got it. What do you think about a long at this point? You feeling pretty good about if a long does pop up? Remember, think about it. We've been tightening our stops because we were like, okay, it's probably going to go down here and have a hard time breaking through. If it does break through, I want to be along for the ride. Right? Well, if I know it's going to have a hard time breaking through and I get a long trade with all this stuff, then am I going to tighten up my stop or am I going to let it have its room? Am I going to leave it at the volatile trend line and then tighten it up once and then let it trail its way up there? I'm going to give it room. Yeah, exactly. So we go in. And, usually a lot of times I'll stop somewhere between 11 and 12. I'm like, we're at this wall. I'm wondering if we're going to bust out and make one more run for it with earnings, all that stuff coming up. This is a good point. I'd much rather have a long here than a short right here. I think we even talked about that in the room today. Somebody was talking about a short, and I was like, yeah, if I was going to take a massive short on this, I would definitely want to see, I laid out several things I would want to see, and the other person's like, yeah, I totally agree. Now, I still took my short, and I actually still made a little money on one and lost a little money on the other one, and, whatever. But you never know. Sometimes it's just we don't know. It may bust through and fly down, right? So, I'm going to put my orders on. Because, hey, it may fly down. If it does, I'm still at these levels, I'm still going to be tight. But if I get a long, I'm going to give it room. So it's moving along there. And then I cancel that order out. Now I get a long. I put my order in to go long. Okay, if I get filled, 4 ticks above the high of that, I'm going to put my stop right down here, which you can see the stops there. As soon as that bar closes up, I'm going to tighten up to 1 tick below the high of the bar. Now I'm going to leave it alone and give it a little room. Because I figure it's going to have to oscillate a little bit around, especially having that magnet there, that mini magnet there. Now, one thing I really like is that my stop is on the other side of the mini magnet. Do you see that? I like that where I tighten my stop up, but I see where this little mini magnet is. I'm behind it. I really like being behind that mini magnet because that's something that's going to usually mini magnet is going to push off it. So it's crossing through that mini magnet, pushing on up, and now it's working on crossing through the magnet and pushing on up, and we're going to, again, all-time highs. So on the volume score, the biggest thing you're going to look at is just you're looking for low numbers, like below 12. And when you see those start to happen and they start to repeat, then beware that you're looking at high possibility of the market reversing. Like, that's really as simple as you need it. Like, you don't need much more than that out of it. So there's also some like really large numbers and divergent numbers and things like that, but that's the biggest piece. So right now I'm just trailing up, trailing up, trailing up. Now what's coming up? Would not worry about a single magnet. So I do like being my stop behind that single magnet, but I wouldn't worry about a single magnet. Nothing on order prints by itself has enough strength. It's a stone, and you have to layer the stones on top of each other to make it hard to get over. So yeah, we had a huge high volume score pop up. Okay. Going up to new highs. Looks like you'll see markets pull back to those high volume scores. But so far, as much as I want to tighten my stop, and I really want to tighten my stop, okay? As much as I really want to tighten it, I have no reason to tighten it up. So I have to sit back and just leave my stop where it's at, which is one of the hardest things to do. I need a reason to tighten it up, and I cannot come up with a justification yet. Now I'm starting to get close to where VAD's getting into over, extreme territory here, right? The dev level is definitely a reason I would want to feel like I should tighten it, but the dev level itself is just like another level on VAD. By itself, I'm not going to tighten up just because the dev level is there. In fact, I would actually expect it to oscillate a little bit around at that dev level before it would break through it, if it's going to break through it. So now that I have my dev level and I have cluster bars and I'm actually exceeding the, extreme VAD all at the same time, now I have a reason. So I tightened it up. And I put it actually behind that bar with the cluster. Right there. Do y'all see that? Like, I had multiple things tell me, hey, use caution. So I tightened it up. Dev, cluster, extreme VAD, all together. Putting all those things together to tighten up my stops. So there's a lot of things you look at on 30 ticks that can help you find your walls. The question was, how do you use the 30 tick trades to manage your trades? I'll use this for the wall management, like we taught at the Apex Live event. But also just the VAD burnouts, like we used earlier, where we said, hey, get out of this trade right now. That's one of the biggest advantages. It's really simple. It's very objective. It's very easy to see. You see a big burnout, whether it be like it shoots up over here or you just get a massive reversal. That would be a good reason to do it. By the way, I tightened it up again because look, I got a mini magnet right there. Hey, I can tighten that up to a tick below the high and be behind the mini magnet. I like that price. And I have a good reason. Again, I'm at the dev level. I'm at extreme VAD. And I got a mini magnet and a cluster all combined up, and I put my stop right behind that, which is just a tick below the high right here. Okay? So, why do some people really like 14 ticks for NQ? Because they want to do the 70% risk management strategy. That's why they picked 14. So I picked 18 based on the wicks. So trust me, I prefer the 70% strategy, but I also prefer to make as much as possible, not get kicked out. So I look at what is going to give me the best probability. Exactly. I got a mini magnet set behind it. So exactly, you got it, Shane. Perfect. I usually see extremely high scores as numbers it's going to retrace to, not as simply an exhaustion number. So I'm looking more at the low numbers, and then the big numbers is a lot of times if I'm looking at a target for it to pull back, that's where I'll look at a really large number. So right now I need something else to tighten it up. And yeah, exactly. If I don't have something, then I'm waiting on the volatile trend line to catch up. If the volatile trend line keeps moving, I don't have any other reason, I just follow the volatile trend line. But if something else lets me do it sooner, it's like whatever will let me move it up the tightest, I'll move it up. But if I'm going to use OP, I want to combine several things with OP. And of course, the extreme bad combined with that helps out a ton. Yeah, I look at the wicks every morning for the markets that I'm going to trade. So the exceptions are, like currently, gold I leave at 6, oil at 8, and ES at 8, just because of how they're moving. If they get higher in price, I may have to go up to a higher bar size. But right now, as far as like oil and gold, I just left them at 6 on gold, 8 on oil, and 8 on ES. Everything else, I look at the wicks on it. And then I usually don't trade oil and gold if they go into low IV. Like I just don't trade them. So yeah, I mean, so we got like exhaustion boxes, we got paw print boxes. Again, nothing so far is giving me anything new, right? I'm still behind this mini magnet. This bar would have to close up for me to move up any tighter. So those boxes, you notice, they happen often, so they're not as powerful, right? Whereas things like really low volume score numbers don't happen that often. Really, cluster bars don't happen often. Mini magnets don't happen often. So they're, a better tell of what the market's going to do next. So exactly. So you're getting your emotions in check by reading the market objectively. And I'm not trying to anticipate what's going to happen. I'm like, hey, it may fly up, it may go down. I just trying to read it and exactly like you said, Kenneth, just be at peace with what happens. When I look at wicks, how far back do I look? I look at the previous few hours. And I sort of see what is it doing that day. Like sort of since the Euro session, so taking that as a trading session into account that's linked. So yeah, I don't want to make trading decisions based on my emotions or my opinions, right? I want to trade based on what I see, not what I think. So I want to respond to what the market is telling me with the order prints. If you want to change the color of your wicks, you can do that in your under data series. So the question is, how do I change the color of my wicks on my bars? So if you right click on the chart, click data series, then it says like wick, color, width, and you can change it. Yeah, I mean, we're getting some pretty extreme levels. Like, it just keeps moving up, moving up. So, and if I didn't have my stop so tight already, if I wasn't so profitable, I'd probably just go ahead and take it. But, I mean, we're pretty tight on our stop, and we're moving it up really fast with the market right now. So, yep. And it moved up with it. The volatile trend line took care of it for us at the exact same time. You see that? How it just trailed. I'm going to be a lot more sensitive to taking my profit quickly if I'm not in a nice profitable position. If I'm in something like this and I get it, then I'm going to be a lot more sensitive to tightening quickly. Here I'm this thing's moving. We're hitting new highs. I'm trying to give it room, but I'm also trying to stay out of the way. So we got another one right here. We've tightened it up. We're pretty much right here behind this zone of interest. So I'd like to stay behind a level if I can. And yeah, Kenneth brings up, all-time highs is probably one of the most uncertain times. It's a great example of trading in uncertainty because you just don't know where it's going to go because you don't have that left side of the chart. So you really become dependent on order prints and you become dependent on bad. And you really start taking advantage of your magnets in that process. Because you have no idea where it's going to go. So you just have to manage your trade based on what the chart's going to tell you. Alright, so let's see here. How did we end up on that? Alright, so lost 30, made 335, lost 25, made 25, made 625. So we netted, 930, not inclusive of fees. Yeah, that win ratio is wrong. Let's see, what do we have? We had 3 wins, 2 losses. So we had a 60% win ratio. People get all caught up in win ratio. Like, it's not about your win ratio. So average win, $328. Average loss, $27.50. Largest win, $625. Largest loss, $30. That's a lot more important than your win ratio. Deviation level, even when you're at new highs by itself, is not going to be a reason by itself. It's in combination. It's really about the confluence, putting the implied volatility along with the order prints and order flow and volume all together, which most traders are just trading the indicators. And you can see how much we can easily get back by not tightening up stops. I mean, just the trades today, it would have been several $100 easy that you would have given back to the market. Yeah, the important thing Brent brings up is make sure to not crunch your VAD bars too much. So, because then you can't read them, right? So make sure there's a little bit of space, like over here, because if they're too small, you can see they're almost about a third of the size to almost half the size, like almost equal to my price size. I mean, the amount of money, do y'all see the amount of money that we kept? Like trades that would have been, easily 100, 125 bucks back. Trades that would have been losses that became wins would have paid for, order prints itself for months. So, I mean, just today on one contract on NASDAQ basically pays the price of bronze for a year. Or pays for order prints for the entire year for you on top of bronze. So, how did I manage the trade that lost $25 with the ATM? I didn't do anything. So, like literally, I just put it on and it took care of itself. Like I got in and it moved my stop and it got me out and I lost $25. Yep, the stops were automatically tightened by the ATM itself. That's right. So that's like, it's so worth it. Like, to just take the time and spend the hour or two it takes to set up those ATMs on that second shot. It makes everything so much easier. Now, the cool thing is, with the ATMs, you can then go in and manually edit. So I can grab the trade and I can move it, right? So, if we go over to this long trade that we were in, go back over here. So the ATM, I got my stop, right? And then it moved up my stop for me. And then it trailed it more for me. But then I got to a certain level. I was able to trail it myself. So I can still grab it, and then it'll actually grab it again and move it up with the volatile trend line automatically. A lot of people don't know that. Like, if you set up your ATM, like I showed you, like, I can move it tighter, but if the volatile trend line starts taking over, it'll actually go ahead and tighten up for me. Again, automatically with the volatile trend line. So, yep, the calculator is updated quite a bit. So it was updated again today with some more information on the front for the low risk, like, quick tightening stop method. I mainly just use the second page because I tighten everything else using order prints. That makes it a lot easier. Yeah, Kenneth talks about, you basically have to go through the experience of wanting to get out of uncertainty. Like, you have, like, because, like, you had this, like, I gotta find certainty, And you have to get through that. And you have to just almost get sick to your stomach and go, you know what? I'm gonna trade in the midst of uncertainty. I'm gonna manage my risk. I'm gonna trade my plan, and I'm gonna use the market to tell me what to do, because I don't know. And when you just accept that fact, like, weight comes off your shoulders, and it becomes so much easier to trade. Awesome. Okay, so with that, did y'all get a lot of your questions answered? Do y'all like seeing all the pieces come together, seeing the order prints and the VAD and KISS like all put together? I do not usually move my stops backwards. Awesome. Let's go ahead and do a... I know I have the list here. Here we go. Prize drawing. And I want to remind y'all, get access to order prints. Like, it pays for itself. And right now, you get that. You not only get order prints, but you literally get every indicator we have. Okay? The tools you don't even know that we have. You may not even got into a trading on it yet. You get access to all of them for the same price as silver. And you get over half. It's literally over half off what it would cost for a year. So it's a big savings. I hope y'all do take advantage of it. It's not just what you make, it's what you keep, and taking advantage of that discount will help you keep more in your pocket. Let's see here. Let me find... Really shocked I haven't lost power or anything yet. You got a big thunderstorm going on. Alright, so just to show you, if I hit run, it'll pop up a different name each time. Okay? So now let's go in, and I'm going to paste everybody's name in that was at the live event and on the stream. And some of y'all are like, hey, by the way, Jared. Congratulations, Jared Brackey. So you are the winner of our Show Me the Money drawing. And we will be paying you out $930. So again, congratulations to Jared Brackey. That's awesome. So way to go, man. Send that over so we can get his information and get him a check. I'm going to send it to him in PayPal. Mark's like, how about split it up with several people? So Robert asked, will bronze movers lose order prints at the end of April if they don't upgrade? Yes, you won't have order prints. Obviously, you'll still have KISS. You can still trade it. Still do everything with it. But if you want to take advantage of order prints and be able to tighten those stops faster, then that's where the silver and gold comes into place. And again, it's not just the annual. You don't have to buy an annual. We also have where you can do monthly silver for gold pricing, meaning instead of $300 a month, it's $200 a month. And I mean, what does it take? Literally one trade that it protects profit on is more than $100. So one trade out of your entire month, which I try to keep things really reasonable and really, affordable. Let's see here. Did I expect a great move today, given the awful movement yesterday and a holiday on NASDAQ? I expected a large movement with the earnings and with the companies that were coming out. So with all the major banks that came out and with the major NASDAQ company coming out, then I did expect them to go up. Also, we noticed all the volatilities rose off of low to median. And so with all the earnings coming out and all the implied volatilities, instead of all being in low territory, like nothing was in low territory today, I did expect more movement. I watch all four markets, so I just recorded Nasdaq like on one screen to make it a lot easier than hop. Because I figured if I'm trying to hop and hop and hop and hop around from market to market to market, it just gets more confusing. It could be confusing just watching one when you're learning how to do it. So I figured this would be a better way today to simplify the process. So yeah, we'll probably do more drawings. So, but right now, just take advantage of what you got and go out there and make some cash, right? Keith, if you can ask inside the elite room, or if you can ask inside the help desk, then we can help you out if you're not seeing something pop up. A reminder, when you load it, you won't see the historical numbers popping up. Okay? It's only going to pop up, it's going to plot it going forward. So if you just loaded the order prints template, you're going to have to let ticks happen before anything shows up on your screen. But that, my guess is that's what happened, is you just loaded it up, and then that's why you don't see anything yet. Simplest, if you want to trade futures and Forex, just go straight to Ninja Trader Brokerage, because they have futures and Forex accounts, and you can open both right there. And then they're tied into the platform, obviously, and it's the easiest way to trade just directly right off the charts. Yeah. So questions like, who would you recommend for futures and Forex trading? Well, it's just easiest if you do everything in one spot. Yeah, and Ninja has like a big special. It's like $400 to open an account. So like it's a good time to, isn't that right? Like $400, like funding. Like that's all you got to, instead of coming up with like $5,000, it's like $400. So, and that's good through April 30th. So if you're wanting to get a futures account, get a futures data feed, don't have to deal with all the demo data feeds and all that crap, now is the time. $400, and the minis are coming out in May. So this is like a really good time to go open a futures account. Would it be possible to enter the scalp method into the ATM? Yeah, we actually, if you go to the calendar, and if y'all lose me, y'all know why. I hear thunder all around. But if you go down to the calculator, like it actually has scalp stuff built into it. So Chris was asking if we could add, scalp methods of the ATMs, and it literally, here's like one of the original scalping methods. Here's the 70% reduced scalping method. So, like literally, just about any combination you can come up with, I think we've put on here. So, can I add the 70% rules to the calculator instructions? They are already on here. So there's the 70% for scalping. So like there's the 70% right there, and then there's the 70% protection method, and there's the 70% scalping method. So literally, like I said, if you come up with it, it's probably already there. So a lot of correct scalping methods are built right here into this 2-bar offset. So it also involves a lot of trades not taken. It's a little bit different. So we probably will teach a version of it. It's a lot more. It's a more aggressive style of trading. Like it's more restrictive on your entries, but it's a lot more aggressive on your exits. So it's a lot of small profits with the occasional big run. You don't need strategies. We're just talking about ATMs. If you want the ATMs, I think you can just lease it. You don't have to buy Ninja. Once you're making money on it, then just buy it because it's cheaper. But and then if you're trading 8x or something, I mean, you can do everything in the demo account. For a live account, I think if you want to use the ATMs, then you need to have like the upgraded version of Ninja, but you can lease or buy it. But it pays for itself really quick because how many trades do you got to make a mistake on to pay for the thing, right? So I would at least lease it for like a month, and then if you're like, yeah, this is worth it, then you can do 3 months, then a year, and then you just buy the thing. I own the multi-license, multi-broker, multi-everything, so it also gives you a discount on commissions, so you save money. So the ATM, the benefit for using it in Nadex is because you'll hear the noises. So like it'll basically adjust the stops, so you can do to hop over to Nadex and actually update it. Alright, so hopefully y'all picked up a lot of tips on the webinar today, and y'all saw like actually how to execute it, put it together, how to combine order prints, how to combine VAD, and how to combine KISS and put it all together to help you maximize your profits. And like I said, I hope y'all learned a few things, or maybe even just refreshed your memories from some of the stuff that we taught at the live event. And make sure to take advantage of the promotion right now. Even if you're a member, you can get possibly a better price than what you're paying right now. And it's, this is stuff that's practical that you can put into use like tomorrow morning. This isn't stuff that you're going to have to go study for 6 months, right? You can go in there and be like, okay, I got a burnout, boom, tighten it up. Okay, I got order prints with these levels coming together, all of them happen at the same time. I'm going to tighten my stops faster, right? Or hey, we're coming off a wall where everything's stacked up. So this is stuff you can do tomorrow, not stuff that you have to work on for 6 months. And so I encourage you to definitely take advantage of it, and let us know if you have questions on it, okay? The question, is there going to be another live event next year? Yes, there is. We'll release details on that soon. Awesome. Y'all have a good evening. Stay safe in the markets. Trade wise. And have fun. And again, congratulations to Jared Brackey for winning the Show Me the Money contest tonight. All right, I'll see y'all next week, okay? And I'll see you in the room. All right, y'all have a good one.